Hey, welcome to another episode of Financial Theory. Let's talk today about SpaceX and its IPO that's coming up in June. Now, I just wanted to mention that SpaceX is only going to release a very small amount of shares to the public. So I think it's something about 4% or so. There's a reason for that because by making the amount of shares limited to the general public, I think that's gonna increase the price of the shares. And I think Elon's betting on that, right? So SpaceX is targeting its highly awaited IPO on the 12th of June this year, 2026. So the company will be listed under the NASDAQ exchange under the ticker symbol SPCX. The valuation target is pretty insane. They're aiming for around about $2 trillion. And this is positioning SpaceX to be the largest stock market debut in history. They're aiming to raise upwards of $80 billion for a market valuation of $1.75 trillion to $2 trillion. So is SpaceX worth the buy? Let's have a look at the financials. So revenue, $18.7 billion in 2025. And the first quarter of 2026, revenue is $4.7 billion. Net income loss of minus $4.28 billion. The adjusted EBITDA, $1.1 billion. So revenue grew 33% from 2024 to 2025 and rose 15% year over year in quarter one, 2026. They've got the rocket segment, the XAI segment, and they've got the connectivity segment, which is Starlink. So those are the three segments that make up the core of SpaceX's business. SpaceX acquired XAI, Elon's other company, XAI, and this was back in February 2026. So currently, Starlink is the only segment that is actually profitable in SpaceX's core business. So the other two segments, the rocket segment and XAI, are both losing money. Specifically, XAI, that segment is bleeding money. So Starlink is the cash cow of SpaceX at the moment. So it generated $11.4 billion in revenue in 2025. And they have an impressive adjusted EBITDA margin of 63%. Now, despite Starlink's impressive numbers, you just have to keep in mind one key thing. Starlink's average revenue per user fell 23% year over year. The volume is actually doing most of the heavy lifting on revenue growth. This is something worth keeping a close eye on in the future. So let's have a look at Starlink's financials. 2025 revenue, $11.4 billion. Adjusted EBITDA, $7.2 billion, with profit margins exceeding 60%, which is quite impressive. Operating income, $4.42 billion. The user base surpassed 10 million subscribers, and some positive signs for Starlink. Cost reductions. Manufacturing costs for Starlink terminals have dropped by 59% from 2022, thus increasing hardware profitability. So at the moment, Starlink is very lucrative, and they're using the profits from Starlink to actually fund the other parts of their business, which is the XAI. That's the part that's actually bleeding money at the moment. So Elon's using all the profits from Starlink and putting it into research and development for XAI, which is burning massive cash at the moment. So SpaceX reported a loss in 2025 of nearly $5 billion. The capex was massive. That's why they had that net loss. So the capex was $20 billion, and that was used to fund research and development in AI. So the main reason that Starlink's average revenue per user is actually decreasing is initially they were selling their internet connectivity to more wealthy populations. As they're moving down the chain, they're trying to expand, they have to sell their services to developing countries who are not going to pay as much. So that's why the average revenue per user is decreasing over time as they're picking up more volume. Elon thinks that over time, the cost to serve each customer is going to gradually decrease by a lot. And I think that's what Elon's betting on. Margins could still hold if that is the case. If the technology becomes cheaper over time, that could actually offset what's happening at the moment. Next up is the rocket segment of SpaceX. This is a segment that Elon is investing heavily in. So the space segment generated $4.1 billion of revenue in 2025. So SpaceX spent $3 billion in Starship development in 2025 and $930 million in Q1 2026. The company has burned over $15 billion in Starship alone. So the space segment made $4.1 billion in 2025, but posted a $657 million loss. And the third segment, which is Elon's big bet, XAI. So even though XAI is burning through a lot of money at the moment, there is so much potential for this segment in the next 10 years. But a loss from operations of $2.47 billion for the quarter. For all of 2025, the AI segment lost $6.36 billion. SpaceX has spent more money in research and development in the AI segment than in space or connectivity, Starlink. SpaceX has spent $12.7 billion in 2025 and $7.7 billion in Q1 of 2026. So despite these losses, I just want to also note that Anthropic has signed a new deal with SpaceX. Anthropic is going to pay SpaceX $1.25 billion per month through May 2029 to rent computing capacity from SpaceX's massive data centers, Colossus 1 and Colossus 2. So Elon's utilizing the excess AI infrastructure and actually generating money from that, which is a good sign to see. But it's worth noting on this deal that either party can cancel this deal at any time. They just need to give each other 90 days notice. The potential in XAI is quite obvious. Despite the huge losses that the AI segment has lost, it's very obvious to see that there's plenty of potential here to actually generate more money in the future. And it's clear to see how lucrative the data center business really is. So here are the key things that we have to keep an eye on regarding SpaceX's future. We have to keep an eye on the average revenue per user, the ARPU. We have to keep an eye on this compression. So subscribers are growing fast, but the average customer is paying less. Is this model sustainable? That's the big question. XAI's losses are enormous and accelerating, and this is a massive drag on the entire company, SpaceX. The other thing we want to keep note of is that Elon has absolute control over SpaceX. What he's done is he's actually set up the company in a way that makes him unfireable. If you are planning to actually buy into SpaceX stock, you're really essentially investing in Elon Musk and not the company. Because when you look at the revenue of SpaceX, it doesn't look good at all. You're paying an insane amount of premium for a company that's actually losing $5 billion. But if you believe in Elon's vision and you believe that Elon Musk will be successful in this, the potential for SpaceX is going to be absolutely massive. Can you imagine SpaceX becomes the first company to colonize Mars? Imagine how much money they would make. That would be insane. The potential is there, but there is massive risk. Unfortunately, SpaceX doesn't have the financials to actually back it up. At the moment, they're losing a lot of money. So it's just up to you whether you feel that you believe in Elon that much that you're willing to risk your money into this company. For me, the financials don't make any sense to me. So as much as I like Elon, he's a big inspiration to me, but I like to invest in companies that actually have solid fundamentals. I don't invest in companies based on hype and promises. So SpaceX believes that their TAM, total addressable market, is around $28.5 trillion. So Starlink is already one of the fastest growing consumer tech businesses ever, and it's still in the early innings globally. So eventually we're going to view SpaceX more like a telecom network infrastructure company rather than an aerospace company. Global network monopolies can trade at gigantic valuations, and that's what Elon is going for here. All right, so that's the thesis behind SpaceX. Are you going to buy into SpaceX? Myself, I'm not going to, but I will be keeping a close eye on this stock and seeing how it goes. It'll be quite interesting to see what happens. All right, if you enjoyed this video, give this video a thumbs up, like, comment, share. I will catch you guys in the next video. See ya.